Credit cards are an incredibly important part of how Americans live their lives, how Americans buy their groceries. In fact, maybe besides our cell phones, no other thing runs through so many different aspects of the way that we live. But there are many proposals coming from Washington that effectively amount to rate regulation of credit cards and debit cards. Now, advocates say that these will promote competition, they'll benefit consumers, they will help small businesses. But it doesn't quite check out. Rate regulation across industries is a very old idea. It goes back to the Code of Hammurabi and even before, and each time it seems to not quite work out exactly the way that regulators think. Today, I am joined by Nick Simpson from the Electronic Payments Coalition, and we're going to discuss how some of these proposals from Congress and from various administrative agencies are going to affect consumers and businesses across this fair nation. So, Nick, thank you so much for coming on with us.
Yeah, thanks for having me, David.
All right. So, first of all, what are the things that you are hearing? What are the concerns that that either you are seeing with some of these proposals, such as the Credit Card Competition Act, which is currently in Congress, and also what are you hearing from businesses in your network?
Yeah, I think you did a pretty good summation of it there in the beginning. You know, people use their credit cards multiple times a day and you don't really think about it. You just swipe your card, tap your card, and the payment goes through. The merchant gets the money, you get your item, and everyone goes about their day. Um, but there are some proposals in Congress and some in state legislatures that are attempting to change all of that. Right now, your credit card runs through a branded card network. If you have a Visa card, it runs on the Visa rails, MasterCard on the MasterCard rails, and so forth. And that's because those companies built those global networks to make all of this work and connect these businesses and banks. And all of this happens, in a second or two, which is a pretty amazing process and technology. The important part of that, in addition to making all that work, is it protects you. It protects your data security, your purchase security. If you have any fraud on your card, you get an alert on your phone. You can cancel it. There's zero, liability on the consumer part. And in large part, that's because they know that network and they invest in security. What you're seeing now is in Congress, the Durbin-Marshall bill, it would require Visa and MasterCard to allow their cards to run on an alternate network. It's never been done before. It's untested. It's a huge experiment that they're taking with everyone's credit cards. So that causes some concerns, not just from an operational standpoint, but also from a safety and security standpoint.
So I think you said something really interesting there. Americans use credit cards because they work. We don't know exactly or specifically how they work. We just know that we go in, we swipe or tap or insert, and then we walk out with whatever we are trying to buy. I don't necessarily have faith that a lot of the legislators involved in some of these efforts fully understand the systems either. But essentially the case for it, as I was saying, is that forcibly injecting quote unquote competition into the market will benefit smaller players. Can you talk about the ways that small businesses and small financial institutions would struggle if they were forced to deal with networks whom they would not otherwise choose to do business with?
Yeah, and the supporters of the bill are going to say that there's an exemption for small banks, there's a carve out for small banks, and it's going to save small businesses a ton of money. But history is prologue on this matter. Congress did this with debit cards already. They put a price cap on debit cards and introduced these alternative networks. And lo and behold, the Richmond Fed came out with a study that said merchants didn't reduce prices. 98% of them raised them or kept them the same. So consumers didn't see any savings from this. But it also said that small businesses didn't see the savings either. So this really benefits massive corporate megastores that have entire departments of people who spend a lot of time figuring out, what's the cheapest way to route, these payment processes. Right now, like I said, credit cards, Visa, MasterCard, they run on those dedicated networks because of the Durbin Amendment that was passed during part of the Dodd-Frank Act. Your debit card runs on a bunch of different networks, and that debit cards are different than credit cards. They have the PIN security features, whereas your credit cards have the chip and all of that. But the main thing is consumers didn't see any cost savings. Small businesses didn't see any reduction in processing costs. But what did happen is you had a bunch of corporate mega stores that made a lot of money and just pocketed it.
Yeah, it's
And
a
if
please,
I would
please.
say, and yeah, and it's, kind of the definition of insanity is expecting that something differently is going to happen when it comes to the Durbin Marshall bill.
I will put out a shameless plug for my own op-ed in the Blaze on the Credit Card Competition Act, which deals with the same Richmond Fed report,
Yep.
which I suggest everyone read. Um, no, I think you bring up an interesting point, which is that these corporate megastores, to whom all of these benefits have accrued, are competing more or less on K Street, not on Main Street. They're the grubby fact of politics is unfortunately that they are the ones who are they're the ones who are lobbying for the bill. Back to the smaller players though, just as consumers expect their credit cards to work and expect their credit cards simply to function as they should, small business owners also have the same expectation. The cybersecurity protections that you get from a Visa or a MasterCard are incredibly important so that small businesses that have limited resources, limited time, and frankly, limited expertise outside of whatever they are doing, they rely on these things. They need them. Can you talk a little bit more about the cybersecurity element of this?
Yeah, and that's a great point because there is a security element, and it's not even just a cybersecurity element. There's also a physical security element. So, from a cybersecurity standpoint, Visa and Mastercard invest billions of dollars a year to stop fraud, to prevent fraud protections, and they're really good at it. Now, I don't know if Americans just want to say we're going to trust a network that we don't know, that we're not familiar with, to do the same. So that's a big unknown. And if there is fraud or a fraudulent charge or a hack or a data breach, like you've seen with Target and Home Depot, that's going to get in and it's going to affect your financial security. So are the cards going to cover that? Are the networks going to cover it? When it didn't happen on their network. So they don't know, if it's happening someplace else. It's hard to find that fraud. Whereas if it's on your network, they have full control of it. They know the investments in it. But on the physical side, think about it. Cash is not free for small businesses. If somebody writes a check to a small business and it bounces, they're out that money. They don't get the money back. Whereas, by taking a credit card, yes, you have to pay to process the credit card, but you are guaranteed to get that money. And the bank has the liability for the person not paying back the bill. Also, think about the Brinks truck. Think about the safe. Think about the person that has to count the cash. And all of these have hidden costs to them. And we've had some small business owners that we work with come in. There's a guy who owns a food truck in Atlanta, and he said a lot of times my 16-year-old son goes to the farmer's market. He sells out of the food truck. He's like, I don't want him carrying around hundreds or thousands of dollars of cash. It's a safety risk for the employees, the family members that might be having to drive this to the bank after a shift, walk to their car late at night. So there's a cyber criminal element, but there's also just a physical security risk involved with cash that credit card processing completely takes off the table. The National Park Service, I'm going to forget the exact number, but Death Valley National Park, because it's in the middle of Death Valley, it's a long way from a bank. They have stopped taking cash because it costs twice as much for the Brinks truck to drive to the ranger's office and drive to the next bank in gas than it does for the actual money that they're taking there. So, there are a lot of costs. That's an extreme example, but it does highlight that there are costs involved with cash and the security of it.
Sure. So we talked about the consumer side. We talked about the small business and maybe the consumer-facing small business side of things.
Mm-hmm.
What about what about smaller financial institutions? I know I've read some because I live a very exciting life. I was reading some comments that were submitted on a recent Federal Reserve proposal that was concerning debit card rate regulation.
Yep.
And the owners and those who are running small financial institutions have concerns about what these regulations could do for them. So like you said, there are cutoffs and there are sort of gestures that are being made, the accommodations that are being thrown out towards smaller
Yeah.
financial institutions. But can you talk about how that actually is going to work if the Credit Card Competition Act is passed, or if some of the regulatory proposals go into effect?
Yeah, and I also live a very exciting life that deals a lot with credit card interchange and processing. It's amazing. It's something that a lot of people don't think about every day, kind of the same way you don't think about how this Zoom works or how an airplane flies. It just does, and you trust it. But yeah, it's a fascinating process. There are a lot of steps involved, and the supporters of the bill, just like with Durbin 1.0, are going to say there's a carve out and an exemption for small banks. Well, we live in a global economy. You can't carve out a bank under 10 billion, 100 billion, whatever the number you set it at. You can't carve out these banks and say you're going to affect 70 to 80% of the market, and the other 30 to 20% is going to just function as it does. As you saw in the Fed reports after the same things happened with debit. The interchange income that community banks and credit unions received went down drastically. And that's not, people might say, oh, banks have plenty of money, but those interchange fees, it does more than just pad the bank's bottom line. It returns rewards to consumers and small businesses. It pays for the data protections. It pays for the network upgrades. And in a lot of cases, it funds bank-owned products that are used to expand access to credit to underserved communities. So this revenue, it does play an important role. And if you're going to squeeze one end of the balloon, the air's got to go someplace else. So there is an interoperability that is going to trickle down. Like I said, you can't affect a broad swath of the market and say that the little fraction that's not being impacted, just because Congress said there's a carve out, the laws of economics aren't going to follow the laws of Congress.
Yeah, no, the economics consistently proves itself to be far less flexible than
Yeah.
a lot of policymakers want. I'll just sort of add on to that, basically to touch on something you said about underserved communities. If I can make a plea to the progressives, because there's a lot of people on the left, progressives, who are favoring these plans. Another issue that the left is worried about is people who are unbanked, as the phrase is, people who don't have access to financial services. And one of the ways that lower income people get access to financial services are through relatively unprofitable services that are offered by various financial institutions. And if you cut down on those profit margins, if you cut down on the parts of their business, or the parts of banks' businesses that are financially profitable, they are going to have less wiggle room to offer these services to people who otherwise would not have access to them.
Yeah, you're exactly right.
So I'll throw out one final closing question. The Credit Card Competition Act is called the Credit Card Competition Act. How can we oppose competition? Miracle of branding right there.
Yes.
What can you talk about the actual competitive landscape that we are seeing in the credit card industry? Because we hear a lot about the duopoly, which isn't really true anyway. And I will resist the urge to go on a tangent about how some of these folks' antitrust proposals would actually increase the consolidation that whatever consolidation exists in the credit card industry would be made worse by these very same folks' antitrust agenda. However, but can you talk about how dynamic is the credit card market right now? What kind of insurgent forces are we seeing? Well, what competitors are out there?
Yeah. So you hit the nail on the head there. What competitors are out there? I can't think of a time where Americans have had more ways to pay for products. You have Discover, you have Amex, you have Visa, you have MasterCard. Those are the four big card networks. But you also have PayPal, you have Venmo, you have Zelle, you have checks, you have cash, you have ACH payments. You can even pay for things with Bitcoin. So there's a whole, Americans have more ways to pay for goods and services now than ever before. And if you're looking at, there's the legal definition of duopoly, which deals with the ability to influence prices and all of that. But at the core of the matter, Americans can go out and check their mailbox every day. And I doubt they're going to say that there's a lack of credit card competition, because if they're like me, they get 2 to 3 flyers in the mail that saying I'm pre-approved for some new credit card. Yes, Visa and Mastercard have the largest footprint in the U.S. It varies when you look globally and nationally. Amex, which is carved out of this bill, has almost as much market share as Mastercard. So they're basically tied there. And globally, Amex is one of the largest lenders of credit in the world. So there's plenty of competition. There's plenty of market forces in the works. And you have the Capital One Discover merger, which a lot of analysts would say would actually increase competition because it would potentially make Discover a larger card processor or network.
We here at the Taxpayers Protection Alliance love competition. We love market forces. We love Americans and others getting out there and making the world a better place and providing goods and services to their communities and to the rest of the world. Because that's how prosperity works. That's how we become richer. That's how we become we've fought our way tooth and nail out of poverty through the miracle of markets and all of these other things. Nick Simpson, thank you so much. This has been an absolute pleasure, and I look forward to continuing the conversation as we go forward.
Yeah, thanks for having me. Appreciate the time.